Blake Cooper from Equalizer here. Going to give you a quick market update, and definitely before I get started, not financial advice. I've been around the markets for quite some time, obviously launched a DeFi project, Equalizer, so I've spent a bit of time in these markets and learning TA and all that sort of stuff. So I'm pretty comfortable to run through my opinions, and they are my opinions of the market. I wanted to make this before the CPI print, got pretty busy, didn't, and it was pretty good because a lot of what I thought was going to happen has sort of confirmed, and probably more so than what I thought was going to occur. I thought we'd get, some sort of confirmation that the bottom's in, and I think we got even more, a heavier confirmation than I expected that the bottom is potentially in. So the CPI report peaked at 9.1. We've all been watching CPI like crazy lately. We knew inflation was a problem. We're up at these ridiculous levels. Look, we're going back to 2002. We've never been up there. Here we are, starting to roll back down to 6.5%. Now, that's pretty good. You've seen exhaustive charts. That looks pretty exhaustive to me. I think we're seeing it in the market that inflation is coming down. People are not spending as much. So I think we continue to see that sort of track back down and get back into, ranges that are acceptable. We'll start to see the interest rates come down. There's a lot of benefits there. Moving on to Bitcoin. I want to try and keep this pretty quick. I did one before, made a mistake in the video, didn't turn my audio on, and it was a bit longer than I intended. So let's try and keep this one a little bit shorter, and I want to do them a little bit more often for you. Keep them short and sweet. Bitcoin, really, to get a good understanding on Bitcoin, we can see these volume spikes where people are accepting purchasing it or buying it up. And this is the largest sort of volume we've seen. We saw the Black Swan event. This was sort of around your Do Kwon time. We thought that could have been the biggest thing ever to hit crypto. Bang, we had a lot of capitulation there. And this one here doesn't even look as bad as you would have thought, because we've had so much that it was so difficult when Sam popped there. So this here's the FTX one. And in my opinion, FTX is the biggest event that could occur apart from a Binance or a Coinbase. And both of those two are pretty well sort of under wraps. I think Coinbase would be very difficult to have too many issues with their position in the market, being listed publicly. Binance, they're pretty meticulous. I don't think we'd have any issues there, and I know there's been a lot of evaluation on them. So in my opinion, we've just bought back up that. But we're also seeing volume, right? And I think this is very important to have a look at. The reason I say that is no retail is buying, okay? And that's what I've been thinking for a long time, is no retail is buying down here. It's all smart money, in my opinion anyway. Smart money is taking action. They're taking their positions. They've been taking it for quite some time, and they've been happy to buy Bitcoin down in the 20 US range. And I'm not saying we're going to be up at 62 by April 17. Definitely not. I think what we will do is we're going to start to, form some higher highs, some higher lows. We're going to start to crab around here. We may even come back down to 23. What will probably happen is people here will sell off onto the people up here at 30 or 28, roll back down here, they'll buy another scoop here, and we'll start to see the market trend and crab and do similar things. I don't know if this chart goes back that far. I'm not going to go too far into that, but we've seen similar stuff where we had our capitulation and we trended sideways. This is where, we're up to very good for us. Almost feels like where we launched, we pretty much timed definitely, we wanted to be launching near the bottom. We thought that we were launching near the bottom. If we picked it to the week, we'll be very impressed because it wasn't completely our intention. Gold, I think you'll see, people have been accumulating here, and it hasn't had too much of a washout. Gold's been that safe asset that people have gone to. But I think you're seeing here, a big uptick, looking to make sort of almost like a bull flag. Wouldn't be surprised if we don't see gold start to rocket up a bit there as well. That's just what I could see happening. S&P 500, we're having a look here. We had our COVID-19 capitulation. I think that's important to mention. We then rolled up and then we got to these peaks. I got it wrong here. I did not expect this big drop and then a rocket. I actually thought we would give us a bit of time to buy down in the bottom, almost like the Bitcoin chart I just showed you, but we didn't get that. So we had a black swan. No one knew what was happening, and then we bought that up as inflation set in, and people went to try and get into assets, and maybe they had more time on their hands. Who knows what sort of things were contributing to this rally. We peaked, we had the crazy peak, and then we rolled back down, and we've almost like put in like a double bottom. You know what I mean? Like almost like a small triple bottom if you think of it like that. This is a pretty large chart. It's nothing special. We haven't got it opened up with candlesticks, but I think you can see we've sort of gone here a few times and the bottom's sort of been bought up on these shares. So I think it's a pretty good indication that we might have bottomed there. And then we've got a nice little bottom crafting here, which matches in with CPI starting to trend down. So I think we might start to see the S&P 500 move again. The reason I pointed this out before is this is my opinion. We were at a pretty comfortable position in the market. We weren't bull running. We weren't doing anything. It was a bull run. It was a long bull run, but we weren't doing anything out of the ordinary where we thought, oh wow, we're over sort of cooked here. We need a big capitulation, which we got. So I reckon the market accepted that this was pretty healthy range. Then we shot off and we got unhealthy, which we can see. And then we've come back down and we've sort of almost sat on that healthy range. So the accumulation makes sense to accumulate where we thought it was healthy in 2020. And where now, 3 years later, we're still accumulating down in that spot where we thought it was healthy. So I think that sort of marries up to make a good case that the S&P 500 has been accumulating here and ready to move. The DXY, a huge one to have a look at. You pop down here and basically topped out here at I think it was 113 or something. But basically we've topped out. The DXY is a basket of currency with the US included. I think it's 5 currencies. And it's been getting a bit overcooked. When it rallies, it's not typically good for assets, especially Bitcoin. There's been a lot of inverse correlation. So when it goes down, Bitcoin goes up, vice versa. So it cooling off is very good, in my opinion. And you can see the range that it likes to sit in. Look, this is a chart back to 67. So we're sitting on there. Okay, we could maybe use that and try and go again. But the way it's come back down, I think we get underneath that and then we start to sit back in the range, which is much more healthy and normal for the markets. Again, probably what I think is going to be happening. Pop on to our chart here, and I know I've got a bit of stuff. This was like low liquidity opening where we started off. So let's just say really by day 2 we were about down in the 2 to 3 cent range. We were down pretty low here. Move that over so we can sort of cancel out the rest of it. This is where we kicked off. We've got a bit of people moving here. Fees, got a few fees coming through, a few bribes. And then we took off and we sort of accumulated and we got a really big spike. Took us up to about $1.80. These, in my opinion, are just lines. I put them there to try and understand the ranges and when we break out and things like that. A lot of the time helps you, find targets and see if we're going to break out. We came down, we made another, this is a 4-hour chart, so we made another higher low here and we took off again. This is where the bribes started to heat up a fair bit. And now we're seeing huge amounts, huge APR. In my opinion, APR way too high for what's happening with this token price. People are able to get 200% APR to make votes with V equal. It's phenomenal. Also, another thing to note: 134,000 equal in the pool. And that means with our liquidity at 484 and our market cap at 464, we've got more than half of our tokens sitting here in this pool. Yes, they can be pulled out, but it shows that we've got really, really healthy liquidity for what we have. And I think it sort of shows that there's a lot of tokens locked up. They're locked up in V equal, or they're sitting here in pools. There's not many tokens out there, so supply is short. We came down and we sort of have found this range here. We dropped down into the lower range. We've popped back into the higher range again. We're starting to, it's not the best. So there we go. We're starting to have another test here. Look, definitely we could chop around. We could come up here. We could try and, but I think we continue upwards. That's sort of how we designed the tokenomics. We didn't have like a big ramp down phase like a lot of farming tokens do. We sort of made it linear so that we could expect to see it roll around. The volume is phenomenal that's coming through. We've done 1.8 mil today. That's huge. We've done 1.4 mil on this pair. And we're starting to see FTM like roll around and do some pretty amazing things. Just popping onto it there. But we're starting to see, look, this is our volume, like how much we've increased. This is where we broke out of that range that we just sat in doing nothing. We had some good volume as we got more liquidity on the platform there. This is just like, if we do this volume all day, then I can equal price, like put your number on where that's going to go. Simply because there's so many fees coming through. When we're doing, $1.4 million in this token alone, that's $3,000 in fees roughly. So $3,000 in fees for 1 day US. Voters get those fees, and there's 600 and something thousand voters at the moment. It's unheard of that you could have these APRs. We've really rocketed off. We may have a little bit of a test down. Good for us. We'll get more volume. FTM's hot property at the moment. I think we're going to see, with Miami coming up, we're seeing DeFi resurgence on FTM. We're starting that. We've seen Mummy come into the market as well. I think they're doing a good job with bringing DeFi back. We're seeing the Phantom OGs come back and bribe on Equalizer. I think what we're doing, like anyone that's doing DeFi on FTM will love it because it's such a great network to operate on. So I wouldn't be surprised if we don't really have a resurgence here and start to see... And it could be said, and again, I don't want to be too cocky and I don't want to be too silly about it, but it could be said that we started this is the start of our liquidity pool. It could be said that we started the FTM rally. That'd be impressive. I'm not going to take full credit for that. But as you can see here, the low was basically when we started, and we've never looked back since. So FTM is doing a great job. I'm in contact with the foundation. They're fantastic. They're doing like an amazing job. Andre's back on the scene, the inventor of the original Solidly. He's doing a great job as well. He's pretty keen and interested again. He can't stay away. He just loves DeFi. So, I think this gives a good market wrap. If you want to grab our token, come on. If you want to swap any token on FTM, then come onto our swap engine and do that here. Bang, you can swap your tokens. Easy to do. I think, we've gone through a pretty extensive list of market wrap there. Want to do them more often for you. Thanks for listening, and all the best.